Guys, welcome back to the Independent Investor Channel. This is everybody's favorite. This is aggressive growth. I think the real underlying message here when I do these M1 Finance portfolio reviews, this is a smaller portfolio relative to my total comprehensive portfolio picture. And I think for a lot of investors, this can be really an attractive way to enter into your more aggressive stocks, higher PE stocks like Amazon, Facebook, Google, Adobe, and the like. You'll see that I've comprised this portfolio to give me a very specific allocation to each of these 11 names. It's a cool way to enter into these higher priced stocks using the power of M1 Finance. So if you don't have a lot of money to invest, and you're one of those investors out there that wants a piece of Tesla or wants a piece of Google or Amazon, this is a very creative way of seeking your exposure to those higher priced stocks. So with that, guys, I'm going to drop you into M1 Finance and we'll conduct the review. So welcome into the M1 Finance aggressive growth portfolio. This will serve as an update as well as an opportunity for me to showcase the opportunity within M1 Finance. By the end of this review, I'd really like you guys to take away a couple things. I'd like you to take away how I enter into some of these higher price stocks, these higher growth names. Certainly want you to remember that I do this relative to my total overall portfolio. So although we're sporting some pretty good gains in this portfolio, I really want you to take it into context. We've got just a little over 10,000, just shy of 11,000 in this portfolio. Relative to the total portfolio, this is a fairly light amount of exposure. So really want you to understand and not rush out and be looking to put hundreds of thousands of dollars in an 11 stock portfolio. I think that's just about as close to insane as you can possibly get. So I really want you to look at these through the lens, and I do want to premise these videos with that. Because the last thing I want somebody to do is just blindly look at these portfolio reviews and just go out and dump money into this because I've done my diligence and this makes sense for me. Just because it makes sense for me doesn't mean that it's going to make sense for you. What I expect that will make sense for anybody catching this video is the prospect of entering into, whether it be an aggressive growth style using M1 Finance or using more of a dividend strategy using M1 Finance. I think anybody that's interested in the market with a little bit of investing savvy can really look at this and say, wow, this is awesome. I don't like how Ryan does it, but I can definitely understand the underlying theme in this video and understand why I seek my exposure the way that I do. These are names that I've wanted to invest in. They've done quite well. The gains in the portfolio here, $36.91. We're not looking for dividends, so obviously very light, anemic dividend. I think Adobe Systems is the one name that we have that does pay a small stipend of a dividend, but we're going after capital growth here. There's no doubt about it. This is a fast, aggressive growth portfolio, as the name implies. We're looking for fast growth in here, and we're looking for exposure in these names, and we're looking to take a passive approach. So fairly different approach in these names in that these are pretty high volatile names. These can price fluctuate a lot from day to day. So I've just taken a strategic move on these and making a bold move in just investing in these companies. I don't have to worry about trading in and out of them. I don't have to worry about screwing around. These are all companies that I like. The one mistake I will disclose is selling Netflix. I just, I went against my original strategic goal for this. The stock had just run up. It had doubled, took profits, and I'm not going to apologize for taking profits, but at the same time, it was really against why I had entered into the name in the first place, with it being the premier streaming service and having a lot of original content. And since then, I've become a consumer of Netflix, and I really like the product. So as far as, being an investor in a company that I'm pretty bullish on their product, I kind of wish I would have still kept it. You guys know that have been with me for a while. This
originally held 12 names. It's now down to 11, and that's fine. Tesla, with its run-up, has done quite well. This is post-merger. We do own multiple shares now of Tesla in this portfolio, and it's taken the dominant position within this. Amazon has come off a bit, still up huge. I just think that Amazon is one of those funny companies that in the short term you can really get burned. But I think long term is a long-term investment. If you really want to gain some sizable wealth, you can do so with Amazon. And I'm trying to do it with a relatively light dollar amount here, using the partial shares in M1 Finance. A lot of you guys may not have $3,500 to buy one share of Amazon. If you're on a platform that does not provide partial share opportunity, I believe the few out there, Charles Schwab, Fidelity, TD, do offer partial shares. Mine does not with Bank of America. So if I want the company, I have to go out there and buy a whole share of it, which is $3,500. This allows me a couple things. It allows me, number one, to buy the stock. Whether it be a partial share, that's totally fine. This is just about a third of a share here, right? So that's cool from that perspective. But what's even more cool is that this allows me to basically dollar cost average the name. It makes it more difficult when you own one stock in the company. My broker, I can't buy dollar cost average the name, for example. If I wanted to dollar cost average Amazon, I would have to buy a whole share of it. So where I can hold a base share in my other account, this really does allow me to do that top-up perspective and own a partial holding in this and then fund it every month. So I'm grabbing a small piece, relatively small piece of Amazon, but nonetheless, I am dollar cost averaging the name. And for you guys that are some old school investors, guys and gals, that are looking to buy into what has historically worked in the stock market, it's better to set that best fit line in, dollar cost average the name, and live to fight another day. Trying to get your optimal entry point in Amazon is going to be futile, and it's going to be even tougher to try to get it in Tesla. Tesla will come back maybe one day, maybe a day and a half, and that's about it. And then it'll continue its dominance in going up. And sometimes you just got to kind of throw the towel in. If you want to be an investor in Tesla, be an investor. Don't stop trying to time it. And do anything other than just invest in the name. M1 Finance allows you to do that. So here's the update, guys. Everything's doing quite well. Adobe, it really sticks out to me, and PayPal. Adobe and PayPal have just really killed it. NVIDIA, just fantastic performance. You know, Facebook has been on a meteoric rise at 52-week highs now as we talk. CRM has just done quite well. The entire portfolio is up. And that's the funny thing is when you enter into some of these aggressive growth names, it's a great little icing on the cake or cherry on top of the portfolio, in that I don't want the bulk of my money in these names. I don't. But the alternative is to not invest in them at all, and that's not satisfactory with me either. There's enough research that I've done on these companies to know that they're really good, minus Tesla, quite frankly, which is more of a trend investment and more of a there's nothing technical that screams to me to buy this, and there's nothing fundamentally that screams to buy it, other than the fact that it is the dominant electric vehicle maker in the space, and if anybody's going to benefit, they'll be the one to benefit in the space. But these are also names that I want to be part of. And again, it comes down to a very, very simple choice. Do I want to be an investor in these companies, or do I not? The answer is yes, but with scale. And I say this all the time. M1 Finance makes this possible where other brokers do not. So guys, I hope you enjoyed the review of the M1 Finance aggressive growth portfolio. We'll continue to roll these out on schedule. Kick you back to YouTube, and we'll conclude the video.
All right, guys, so we've come out of the aggressive growth portfolio. A few takeaways from this. This is really accelerated nicely. This is set up with a strategic goal of capital appreciation. We're not looking for dividends here. We're not looking to be cute, but we are looking to enter into some of these great high growth companies and use the power of M1 Finance to fund the account over time, dollar cost average the account over time, and have those dollars flow into the portfolio as an aggressive growth portfolio. I think I'm onto something here. I think this is a great way to seek exposure to these higher growth names, but not completely weight your entire total comprehensive portfolio toward these higher growth names, because they can be all over the place. You can make a lot of money and they can retrace very, very quickly on you. And I think the real takeaway here is how I'm using M1 Finance to get exposure to these companies, yes, but doing it with relative scale. If it's your first time to the message, guys, you want to make sure and hit the subscribe button, leave your comments at the bottom of the video, and share the message with anybody out there that you may know is looking for some introduction to the stock market, what's available in way of accounts. We've just showcased some of the features and functionality of M1 Finance. They may be interested. Bring them onto the channel. We'll turn them on. We'll get them invested and introduced to the prospects of investing in the stock market. Guys, thank you so much for tuning into the message, and good luck in your investment future.